Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 15th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area and make sure you're signed up for our email distribution list. So that way you can be notified whenever we post these videos. We'll also let you know which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails. And I imagine after today's selling, there's going to be a lot of oversold cluster signals. In addition to that, we're heavy users of X, formerly known as Twitter. My handle is @BrandonVanZ. If you're not following me already, I would encourage you to do so. We really appreciate those of you that click like and repost on X as well. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And my oh my, was today a doozy. We had quite the selling. It wasn't the most aggressive sell-off day that we've ever seen, but the consistency of the selling is noteworthy. You look at this heat map here, and a picture is worth 1,000 words. You hardly find any green out there. You'll notice that there were a handful of home-related names that were in the green. That's largely due to what you may have seen me posting about last night on X with Warren Buffett and Berkshire Hathaway releasing their 13F, and they bought, I think it was 3 different home building companies here in the second quarter. Now, I'm assuming they're still holding those, but you never know. So that is the one thing you have to keep in mind with those 13F filings, that we have 45 days between when they need to be announced and the end of the reporting period. So there's always the chance that they could have floated out of those already, but that's why people like looking at the Berkshire Hathaway ones as opposed to a lot of the other more active managers out there, because traditionally they don't move in and out from quarter to quarter as often as others. So odds are fairly high that Warren Buffett and Berkshire Hathaway are establishing some sort of a home building position there with stocks like Lennar and D.R. Horton and NVR. You also found that a home-related play was up today, and that was Home Depot. They reported their earnings before the bell, and as I mentioned on X, the real winners here today for Home Depot were probably the folks that were selling iron condors and straddles and strangles, because Home Depot barely budged at all today. It was up 0.66% on the day, and the market maker move that was expected was $11. So had you been selling premium, you probably walked away pretty happy there with Home Depot. Comcast had a nice day as well. It was up over 1%. They've actually had, they've been a quiet outperformer here more recently. They really struggled last year into the fall and winter. It's been an area that we had focused on with dividend growth investing, picking up some communications shares there, and they've come to life a little bit here more recently. So they had a fine day there as well. We did find that, speaking of dividend growth investments, Amgen had another strong day. Some of you saw my post here, I think it was last week or the week before on X, where I was talking about how Amgen was up 3 days in a row, more than 3%, and the last time that happened was over 20 years ago. Today, another solid day for that dividend grower, up nearly 2%. Had a few other healthcare stocks that managed to close in the green, not by big amounts, but Intuitive Surgical, Boston Scientific, ResMed, they all closed in the green. And then, of course, the big kahuna these days, Eli Lilly, another all-time high, as the market remains very jubilant about its prospects with its weight loss drug and perhaps its Alzheimer's drugs as well. That stock was up another 1.6% today. Remember that it is now the largest healthcare company, at least in the United States, and to my knowledge probably globally as well. One of their competitors over in Europe, Novo Nordisk, is also quite big, but they're both being driven by the same theme of weight loss drugs. You can also see that in the tech space we had Synopsys that closed a little bit higher. It's one of our coffee can positions in our top-down trend trading class, so we keep a closer eye on that one. I believe they have earnings coming out later this week, so the way a lot of stocks have reacted to earnings, I don't know if that's necessarily a good thing, but for today at least, they managed to close in the green. Oracle had a nice session, up 1.5%, and then you'll notice that NVIDIA, one of the Magnificent Seven out there, another coffee can stock of ours in that class, was up 0.43% today. That was pretty much about it for the big winners, which were far and few between. Now on to the more obvious conversation, which is who were the losers here today. So let's quickly review the Magnificent Seven, and you can see Microsoft was down about 0.67% today, Apple was down 1.12%, Alphabet was down 1.18%, Meta was down 1.38%, Amazon was down 2%, so a little bit of a bigger move there, and then Tesla was down 2.8%. So it seemed like the two discretionary companies within the Magnificent Seven were the laggards here today, with NVIDIA being the only one that could stick its head above water here today. In terms of the other companies that sold off today, I think one thing that really stood out to me was the financials. They got absolutely annihilated today, and it's a shame because the financials were actually starting to make a pretty positive rebound here, a couple of weeks back, but it seems like that advance has been stomped out, and you're now stuck with a lot of charts that are kind of in limbo here all of a sudden. One of them that was down the most today was PayPal, down 6%, and recently we heard news that they're going to be getting a new CEO. I think he is going to come from Intuit, but at this rate he can't get there soon enough. PayPal shareholders have been in the house of pain for a long time at this point. If I'm not mistaken, I think that stock was up over $300 here just a couple of years ago, and now it's below 60. So tough times there for PayPal. The worst performer in the market today was Discover Financial, down 9.4%, and that was largely due to their CEO stepping down somewhat unexpectedly. But even beyond kind of those executive movements, you can see that the banks in general got hit pretty hard today. JP Morgan down 2.5%, Bank of America down 3.2%, Wells Fargo down over 2%, and Citigroup down over 2%. Those are your big four here as far as the traditional banking, and then of course you got to throw in Morgan Stanley down 1%, Goldman down 1.6% with the investment banking business. So tough day there in the financials for sure, and that probably was a big reason the market struggled as much as they did here today. You also found that we had pretty much selling across the board in some of these smaller sectors. Materials were pretty much completely down. Utilities were pretty much completely down. Real estate was almost completely down. It looks like Digital Realty managed to close barely higher. But I mean, we're talking about entire sectors that were pretty much clean sweeps in terms of selling here today. Industrials is one of the bigger sectors out there compared to those others that I just mentioned. And even there, it was brutal. I mean, you hardly find anything that was up. There might have been that one right there. Generac was up a whopping 0.35%. And in the consumer staples space, you did have Cisco up 0.37%. But, we're talking about major swaths of the market where you have either 0 or 1 component within entire sectors that could close in the green with everything else in the red. I mean, it was a washout type of a feeling day, which is again kind of why it's a little strange that the end result of the market really wasn't that bad. The market was down over 1%. But it wasn't one of these big 2 or 3% washout types of days, and those days do happen as well. But the persistence of the selling today was quite stark there for sure. Let's take a look at the specific numbers now, and you can see, hang on just a second, there it goes, that we had just 43 stocks in the S&P 500 that managed to close in the green today. That's only 9% of the index, which means that basically 91% of the index closed in the red today. So again, that feels like a major washout type of event, the type of stuff that we would have experienced back in March of 2020 and that type of thing. But the problem is you look at the actual evidence of the down move, and we were down just 1.16%. Now, before we rain on that parade or the concept of that, we do have to remind ourselves that even 1% sell-off days have been few and far between lately. So I always like to look at this chart here whenever we have that type of a day, and you'll notice that's what that candle looks like when that red candle or bar stretches down below that blue horizontal line there. That's a 1% price move to the downside. And you'll notice that if we went all the way back here and started just after kind of this March 22nd, and we started with our eyes focusing on March 23rd, remember that would have been immediately after the regional bank crisis with Silicon Valley Bank and all that kind of stuff. Well, since March 23rd, we've had just 1, 2, 3, 4, and today is the 5th day where we were down 1%. That's it. We're talking about 5 months worth of trading with just 5 trading days along the way that we were down 1%. And none of them were down 2%, right? And again, for those of you that might be newer, you might not know if that's kind of, good, bad, or otherwise. Well, just look at what was happening a year ago. We had all kinds of sell-offs. I mean, heck, we were having days like this where we were down over 4% in a single day and down 3% in a single day and lots of 2% meltdowns, right? So, today was maybe a little bit of a start, but it certainly wasn't this sort of collapse of the market like you might have expected when you saw that heat map. Notice that the VIX did rally to 16 here today. Let's go ahead and take a look at our 4 grid now, and you'll see here that all 4 of our charts have a red or pink background color, and that suggests that the market forecast posture remains bearish in all 4 of those charts. With the S&P 500 and the NASDAQ composite, we would consider those strongly bearish. Note the darker shade of pink on those, whereas with the Dow and the Russell 2000, it's that lighter shade of pink. But again, it was just a 1% down day for the S&P 500. With us not getting to 100 likes, sadly, on the last video, I'll be wrapping this up in just 15 minutes. But remember, traditionally when I'm doing the video on a day when the S&P 500 is down 1%, I would be showing you a sold put trade idea on a high quality dividend growth stock. So I hope many of you were able to do that on your own today. I know I found a couple of situations myself, but we couldn't get to the 100 likes. I did check the numbers, and it was interesting because out of everybody who watches these videos, only 25% of people are willing to click like. So that kind of gives you a sense as to how much of an ask it is that we are asking you to help us along to support our videos. 3 out of 4 people refuse to click like. Only 1 out of 4 does choose to do that, and we do appreciate those of you that do that every single time. It does mean a lot to us, but we'll keep it nice and short for the rest of you here tonight. And if you want to get me back on track with an hour-long presentation for you on Thursday, take the 5 seconds out of your day and click like for us there on X/Twitter, whatever you want to call it these days. But with the S&P 500, it was down 1.16% here today. It was noteworthy as well in that the moving average color changed. This is the 30-day moving average. Notice it is now red, and what that means is price is below a falling moving average. Notice the same thing is true down below on the NASDAQ composite, and the same thing is also true over here on the Russell 2000. So all of the sudden, we have our first instances of red color on the moving average for the first time in basically 2.5 months or longer in those 3 indices. With the Dow, we're still barely hanging on to a yellow moving average, but that could very well come sooner rather than later. So today's worst performer was the Russell 2000, down 1.29%. Today's best performer was the Dow Jones. It was still down over 1%, but just barely 1.02%. And then the NASDAQ was down approximately the same as the S&P 500, down 1.14%. So we're about done with our video here. Just a quick recap. It was a washout feeling type of a day with 91% of the stocks closing in the red. We now have 3 out of 4 main charts with a red moving average, price below a falling moving average, and all four of these charts have bearish intermediate postures, with the S&P 500 and the NASDAQ with strongly bearish postures. But that'll do it here for tonight. I appreciate you checking out this video. Again, if you like these short videos, then don't click like. And if we're under 100 by the time I do the video again on Thursday, we'll keep it short and sweet for you that day as well. On the other hand, if you prefer a longer video with more analysis and sector selectors and trade application examples and 12 grid analysis and all that extra stuff that I generally throw in for you, make sure you're taking the 5 seconds out of your day to click like for me there. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.